Oil futures volatile today, with prices now headed for their biggest weekly drop since March. Concerns about global demand continuing to outweigh any concerns about supply. That's even as OPEC Plus maintains its production cuts. Let's bring in Yahoo Finance's Ines Ferret to give us those details. Hey, Ines.
Yeah, Rochelle, and if we take a look at WTI, it's stabilizing right now. But keep in mind that over a week ago, these prices were at their highest level this year. Right now, we are looking at a 6-day chart, and WTI is down more than 9% this week. A lot of the heavy selling went on Wednesday and Thursday. A flurry of options trading that exacerbated the selling. Also, concerns about demand that also was not helpful for the selling. Now, the selling may be overdone, though, according to some analysts, like Barclays analysts, saying that the recent correction in oil prices has been too rapid. They also say that this narrative of demand destruction doesn't really stand because of the fact that very little of the recent run-up that we've seen with oil prices has been passed on to the consumers. Now, yesterday or the day before, we had earlier this week the EIA data that came out about gasoline demand being at its lowest level in 25 years, and gasoline futures have been lower. This is a 12-day chart that you're looking at of gasoline futures, a 1-month chart here. Also want to take a look at where we're at with some of the energy stocks, because we are seeing ExxonMobil, which is under pressure. This is after a Wall Street Journal report talked about ExxonMobil being in talks to acquire Pioneer Natural Resources. This would be Exxon's biggest acquisition in more than 20 years since it merged with Mobil. And it would make ExxonMobil a dominant U.S. producer of shale oil. Now, the deal is valued at as much as $60 billion. Analysts have been mostly positive about this. You've got Citi analysts that are saying that the consolidation in this really fragmented Permian shale remains compelling. They're talking about economies of scale. And ExxonMobil has been really on the lookout for an acquisition. But of course, oil prices have been very, very volatile since the pandemic began. You'll remember when oil prices went negative and the energy companies were underwater, then they spiked. This year, they have also been volatile as well. But it's a good time for ExxonMobil if you look at their stock price, because they just recently hit new highs. This stock price was at $120.70. So they're not too far off their highs, guys.
Yeah, it has been a wild ride. And that's when you consider where these oil majors have been over the last few years. Certainly interesting deal, though, potentially in the works. And as for Ray, as always, thanks so much for that.